Which stock to trade today? We're going to look at whether or not any of the stocks that popped on Friday, Snap, Bill, Amazon, even Twitter, could potentially be follow-on plays that go on. And will they be stocks to trade for the coming week or so? Or what about stocks like GM and Ford, or even Facebook, Meta, which dropped hard last week after their earnings? Could they be in for a bit of a rebound? And should we be looking to try to find trades there? So that's what we're going to cover here in the next half hour. Let's see if we can share my screen and get into it. A little bit of technical challenge here. Give me a second. We'll do it this way. There we go. Move it over here and sharing. Okay. So here's the thing to understand about the stocks that dropped heavily. The reason a lot of stocks dropped last week were that investors felt, hey, we've got the Fed coming up, and the Fed's going to start raising rates. They're going to taper off their bond buying, and they're going to raise rates, and that's going to make it harder for tech companies to continue borrowing. And tech companies make a lot of money when they can borrow and then produce something that has fantastic return. But if it doesn't work, if it's a flop, that's okay. They didn't lose a lot of money, at least not yet. They borrowed, and then they got to pay it back little by little, but they got time to come up with the next hit to pay back that money they borrowed, et cetera. So it's tech as an industry is notoriously more sensitive to that kind of change in interest rates. And so when Facebook came along and said, yeah, we're not going to be growing much anymore in terms of monthly active users. I mean, they got half of the planet in terms of numbers on their platforms between Facebook, Instagram, and whatever else, right? WhatsApp. Plus, Apple made it so that Facebook can't track you across all of the activity on your iPhone, and that could cut into the effectiveness of Facebook advertising. It's a funny thing because most of the people that advertise on Facebook are small businesses, and Facebook has continued for years to be the cheapest place for a small business to try to do advertising at just the scale they need and get just the target market they want. Far better than Google, far better than Reddit or any other social media platform where they might be trying to reach targeted YouTube targeted users. So now that the strength of that has been diminished, the cost of that will likely go up. And I think that analysts are really feeling like they're not going to get that back. The thing is, at the same time that was happening with Facebook, and so that's why their stock dropped 23%, sort of a record loss of market cap because of how high priced it was. And it's been a long time since we've seen a big high market cap company drop as far as Facebook did. But at the same time that was going on, another company, also social media, did something else interesting. They started making profits, where before they haven't really been able to be profitable. So here is Snap, as in Snapchat, right? They were estimated to be losing 9 cents a share, and it turned out that they made 1 penny per share. And if you go back to previous earnings, they lost money. They came in ahead of estimates, so they were doing good for the past 3 quarters, but in each case they were losing money. In fact, this is the first official time that the firm has ever been profitable, ever. I mean, the stock's been around for, what are we looking at here? 4 years, a little more than 4 years. And the company was, going probably about 3 or 4 years before that, in terms of the product, if I remember. So when Facebook hit, everybody thought, hey, they're going to have the same problem that Meta had, this drop because Apple changed their privacy settings. But in fact, kaboom, no, they didn't. This was a 63% increase. I mean, it doesn't look like much. You're just coming down, and then all of a sudden you're coming up. 63% increase, though, from $24 all the way up to $39. It's huge, right? I think that there is the possibility this stock has a lot more room to grow. I mean, just here recently, while they were still losing money, right, 6 months ago, they were up in this region, in the $80 region. Now that they're actually making money, if in fact they could continue to monetize their platform, this is going to be a really interesting stock play. And how far it could go, don't know. But here's what we don't know: the future, right? But what we do know is we like to find stocks that do three things. One, they are gapping up. Two, they're crossing their 10-day moving average. Let me throw on a moving average, and I'm sure we'll see that. And that's actually a 9-day, but yeah, you can see the cross is there. We went from below it to above it in the middle of the gap. And the third thing is the possibility for a downward trend to become an upward trend. Not only has this gap and the cross of the 10-day moving average occurred at the same time it did so on this very high volume bar. It did so with a gap that closed higher, more than 1.5 times the average true range of, this is a bigger bar than usual, right? And most important, on top of all that, it's got this incredible story of it came in, 8% above the estimated revenue. So they thought they were going to be making 1.2 billion. They're making 1.3 billion in sales. And it's like, Snapchat, really? How do you make any money off of Snapchat? Advertising, baby. I mean, it's all about how many advertisements you can get users to see. Snapchat, nobody pays anything for it, but they use it a lot. And there are times where in the course of using it, you can see an ad, and those ads are $1.3 billion in revenue for Snapchat. That's really impressive. So if in fact they can keep reducing the cost and keep increasing the ad revenue, man, this is a company that people thought they were going to be profitable here. They didn't make it. They didn't get profitable. Their next earnings, nope, they lost money. And, the revenue was a bad surprise, right? But even look at that revenue number, 1.06, and they got 1.09, or 1.09 was the estimate, 1.06. They missed it by $30 million. 30 million. They just cleared it this time by 100 million. Okay. So I feel like, and they kept their costs down so that they're profitable. I mean, I think that this is where, up in the 70s is where this stock has the potential to go if investors believe that they can become sustainably profitable and can weather the interest rate hikes. I think that that's not going to be a problem, because you stop and you think about it. Interest rate, it's not going to go to 9 and 10%. It's going to notch up a bit at a time. And when that does, that'll make borrowing still a little more expensive, but not a ton. And it won't take much growth in order for Snapchat to see that it has, for investors to see that Snapchat has this path to sustained profitability. So I feel like this is a real opportunity here. And this would be my number one suggestion to consider. Okay, not a licensed financial advisor. I'm not telling you what to do with your money. You have to go do your own due diligence. You have to trade or invest at your own risk. I'm not responsible for any losses you could make, et cetera, et cetera. Get it? You could lose money. That being said, if you don't have any better ideas, you should check out this one. The way I like to trade a stock that has a gap like Snap is showing here. I love these kinds of stocks because they make it really easy to trade in my mind. You simply set a stop loss. The most aggressive stop loss you could set would be right underneath the low of the gap. But when there's a big gap like that, it's definitely not going to be filled if the trade is going to go right, if the company is really going to do their job, and if they're going to turn profitable, et cetera. Yeah, this is never going to get filled. What is going to happen is over the next 5 days, there's a 58% chance, according to historical testing done in an article published in the Journal of Technical Analysis back in 2013, which is where I base all my gap strategies from. 58% chance that we'll dip through the course of the week. So you could probably pick this thing up somewhere. Well, right now, it's already doing that. You could pick that up at either this price or maybe even a little bit lower, but I wouldn't try to wait for it to go too much lower. Probably 37.75 is your best bet in terms of how low to try to pick it up. Don't bother trying to go any lower than that. If you're an impatient guy like me or gal like me, guy like me, or you're gal, you get the idea. Anyway, and if you're impatient, then you just buy right now. The study that was done on the gap trades was based on the idea that you buy at the open on the next day after the gap. You don't catch any of the gap, you buy the next day. And it showed that there's a 60% chance that it will outperform the S&P 500. Now, if the S&P 500 is going up, great. That means this thing's going up and going up even more. Not a big surprise since, it's much more volatile than the S&P 500. The big question is the S&P 500 really on its way up? If S&P 500 goes down, this thing may just go down just not as much. And yeah, you're beating the S&P 500, but you're still losing money, right? So I like to do these trades in such a way that I set up what my risk is. And like we said, the most aggressive trade was right below there for a stop. I'm just going to put it just a little bit lower than where it was before those 2 days. Give it a little bit of room. 33.50, we'll say, right? And then we're getting in at 38.50 or so. All right, so that's a $3 stop loss. And then $1.50 profit target would be my risk two to make one style of doing things. And $1.50, let's see, what would that be? We're in at 38.50. Is that really $3? Oh, no, that's $5. That makes more sense. It's $5 stop loss, looking for $2.50. So $1.50 would have been 40. 41 is all we need to get in order to get that $2.50 risk two to make one. Now that's actually not very much room, because the stock moves a couple of dollars every day. So not every day, but on many days when you have a big day, if it's going to move in your favor, it's going to go up to $2.50 and get hit. This is actually one that I would consider doing something more like risk two to make one. Where you'd only have a 30% probability of actually making that profit target, 33% probability. But if it made it to here, good chance it's going to continue. So it's a really worthwhile trade in terms of a longer trend trade. In terms of a short, quick hit trade, which is what I do most of the time, then right there is the profit target. Be in, stop loss, and then trying to get that. So the trade setup would look like this. I'll just bring up the paper trading order screen. Been a while since we've done this. All right, so take profit, stop loss, $5 on the downside, $2.50 on the upside. And that's it. That's my setup, right? In at 38.08, out at 33. All looks pretty good. I'd be up at the profit target would be $40.50, 40.70. I mean, right now, because it's jumping up and down. But yeah, let's go ahead and put this on as an order just the way it is. It went right up just as I was about to try and get in. And so I think the limit order, 33.38, and I'm already at 33.50. So I might have to wait to get filled on that. We'll see if that happens. Hopefully it comes back down and puts me back into it. So we've got a 5 or 6 cent bid ask spread that shows up. There we go. Now I'm in. Okay, fantastic. We've got you can see the bid ask spread is popping back and forth between 5 and 6. That's not that giant, but for a stock that's only in this $30, that's kind of big. So the good news about that is that if this stock really starts going, it moves fast. It's going to move up fast. The reason it's 5 cents apart is that there's just not a lot of orders. If there are a ton of orders on both sides of the trade, then that spread gets really small. If it's that far apart, then the market maker is worried about, covering their risk. So that's the bad news, is you got to pay that spread getting in or getting out. The good news is that if in fact it moves in your favor, it can move really. So anyway, this is that's the first trade setup that I think is worth considering. And so we'll just leave it like that and come back to it some other time, like next week, see how we're doing there. Now, what about, so Facebook dropped, but Snapchat didn't. I'm sorry, it did drop, but it came right back because everybody thought they were going to be have impact from the same thing that was driving down Facebook, but they didn't. They were wrong about that. Is there another stock that's like that? Yes, Amazon, but Amazon's $3,000 stock. Got to wait for them to split. Twitter also did something like that, but Twitter has earnings coming up, and who knows what could happen there. I'm not really bullish on Twitter. I think that they've got problems with their business model, as evidenced by that long slide. And maybe people are wrong. Maybe it's going to be another Snapchat situation, but I kind of don't think so. However, there's this company, Bill.com. It jumped like Snapchat, made that gap, and it's already on its way up. So unfortunately, you can still get it. It's a higher, more expensive stock, but this is why Snap was more interesting than this one, because Snap's already starting the pullback. Now, we watch for a pullback over the next week and see if, in fact, it gets back into this area around 230 or lower. If it does, then it's probably an interesting, good purchase, because you can set up your risk in the trade getting in here, stop loss somewhere down here, and profit target somewhere up there, and away it would go. I think that Bill.com, so one of the things that Bill.com does is, it does a lot, but one of the things they do is they do payments for invoices. So somebody sends an invoice, like a contractor who does work for a company. So there are many more people getting into the workplace now, and a lot of them are getting in as contract workers. And so I think this platform is fulfilling an important need, and that it's just going to get more and more users. We had a jobs report that was 3 times higher, expected to come in at 100,000 last Friday, came in at 400,000. So the workforce is really pushing. I think that this company might be the beneficiary of that. Notice that they were expected to lose money, and they broke even. This big jump happened on the news that they broke even, and came in at 20% more sales revenue than they were expected to make. So I kind of think that could be an opportunity to keep going. Like I say, much higher stock price though, and probably you've got a much higher spread between the, you got a $2 spread between the price. So that's going to make it tough to, you're looking at this and thinking, what? I would get in here at 238, I'd have to set my stop loss $40 lower. Yeah, you would, because that spread is between $1 and $2 at a time. So that's a pretty rough transaction cost. Again, why I'm a lot more interested in Snap than Bill, but wanted to point it out to you. All right, now how about the other side? These companies, Ford and GM, I mean, this is an interesting story to me because GM came out with really good earnings, right? Now, the surprise that they were under on revenue, I wouldn't have expected that to be a surprise, but they said, we believe we're going to be making a lot of sales, particularly in the second half of 2022. Whether that's because of their electric vehicle thing or because they've got just other initiatives that they believe are going to hit. They were very optimistic. Plus, they made more money than they were expected to make. So you would think that this is, a company that's on its way up. Problem is that so many people are getting into the workforce in the U.S. Because wages are going up, but GM's wages don't really have a lot of flexibility. If they do, they eat into their margin, right? So I think Wall Street's saying, I don't think you guys are going to be able to sustain margins on the vehicles that you make, because you're going to have to hire workers at higher prices than you've ever had to just to be able to get your production going, get the sales made, et cetera. So whatever the case of it was, this was how the market responded. It jumped up initially and then sold and sold and sold. And today it's sitting down here. So the question is, are they really just going to, fail and drop and go lower? Or is the market overreacting? And in fact, are they going to come back up? And how will we know? Well, we don't know. We don't know the future. What we do know is how to set up a potential trade to figure out our risk. And the easiest way to do that would be to just set the risk someplace like right here, right below the most recent low. That's your stop. So you could say, all right, well, if I were to make this trade, if I were to try to pick it up because I think this is a dip, and we have a couple of points of support right through here, and we had this relatively good news in earnings, so it's a good chance that right through here could be support. So if I'm going to make that trade, then I'm interested in doing so from this position, right? Risk 2 to make 1. And when I do that, and so in this case here, we'd be looking at 51 to 49. So that's $2 lower. So I'm only going to need $1 higher. Well, to what? 250, kind of like. So I need a $1.25. That's going to take me to 52.50. I can bring that down to, now I've got this wrong. I've got my math wrong somehow. 51.73 to 49.08 is $2 and 73 cents. 270. Yeah, 275. Half of that's going to be $1.30 something. $1.30 higher is going to be 52.53 even. Yeah, I guess that's right. It looks less than half of this distance, but whatever. That's the setup. So if I run up and I make that profit, this is one I don't want to try and just take the lid off and let it run. I want to make that profit, and I want to come back and do it again and again and again, because I think this is going to be choppy going forward. But if in fact it takes off, I'll know. I'll be able to see, yeah, this just keeps going higher. I'm just going to let it run. But for now, I think that's the setup for GM. However, if GM is going to be okay, some people feel like it's the opposite. Ford, if GM is bad, Ford is worse, right? I feel like if GM is good, Ford is better because there's more opportunity. People expect less from Ford. And the reality is, in my opinion, if GM can figure out how to do electric vehicles and make more sales and solve all of their how do we combat Tesla woes, which is really kind of weird because Tesla doesn't make near the number of cars that Ford does or GM does. If they're going to figure all that out, then if GM can figure it out, then Ford should be able to figure it out. And if they do, they've been beaten down a lot. And people just really have been expecting Ford to fail for a long time. Here, they came all the way down to $5. They are now an $18 stock. We're a $25 stock. So, from COVID, from the bottom of COVID to now, that's a 500% increase till recently, and now they're back down. So it's like, okay, we got a little ahead of ourselves. Before COVID, though, they were having the problems that you know they were, and it was $10 a share. We're above that now. We're like more than twice above that. So why? What's happened? Well, the economy recovered, right? And if it recovered from way back there at $9 to almost double where it was, then that's telling you they really do have something figured out, and they really are going to, right their ship, so to speak. And here's a way I'm going to do this. I'm going to put on this regression channel from the bottom of the pandemic start until now. Where are we? See, we're outside that channel. Oh, sorry, that channel is 3 to the upside, 1 to the downside. But notice how well that's 3 standard deviations up and 1 standard deviation down. Actually, I'll leave it because this looks really nice. Here we've got those. When it came below, that was too low. Now is a good time to consider getting in. When it got above there, it's too high and it's come down. So where are we now? We're below. I mean, we're not way below. It could keep going below. But I guess what I'm saying is this has had so much of a drop. Now it's time. Now it's worthwhile time to consider, where's the support? Where could it be? If I were to be taking a play on this right now, I think that this would be the first point of support I'd be looking for. That's where the earnings gapped up and that held. That's not been pierced all this time. The earnings looked bad, according to this. Big surprise that they lost a lot of money compared to what they were expecting to be able to gain. They were estimated to come in at 45, but they reported only 26. Weirdly standardized 303, so that means there's charges. Charges are like they had this big expense, or they had this tax item, or they had something where they had to pay a whole bunch of money, but it's a one-time thing typically. So my guess is that that's going to make this. I mean, if you take that charge away, then we're making 303. Nobody's paying attention to that number, but the number is really high. And it says if you don't have these charges, if you don't have these things, and your business model is working, you have the chance here to be massively more profitable than you have been. Meanwhile, sales, well, they were down. No big deal. That was like GM was down too. And okay, maybe people are just not going to buy new cars. I don't know. But if in fact you've got brand new cars, and if you've got wage inflation, which clearly is happening, right? Then there's quite the possibility that somewhere into the second half of the year, people will be buying new cars, and interesting new cars that Ford and GM are putting out. So it's going to take a while. But between now and then, I think you could see a chance for prices to snap back. And I think that that's another interesting opportunity. And then last of all, just a couple of minutes here, let me throw out this one. This company is Modine Manufacturing. They, if I recall properly, are a supplier of auto parts to Ford and GM, to the likes of Ford and GM. And so just like both of the others, they've been trending lower because people have been worried about them, but then they jumped because they had good earnings news. Unlike the other two companies, they, as suppliers of the parts, were really making a lot of profit. This probably has to do with stuff like supply chain disruption. How many times you heard that? So many are sick of it. But because there's supply chain problems, anybody who actually has parts gets to charge higher amounts for them. So these guys probably have higher profit margins right now. The question is, are those sustainable? And I think that the industry is saying, yeah, I doubt it, right? But the truth is that if Ford and GM, who they sell their parts to, is going to, if they're going to turn around, this company is going to lead the way. So you can keep an eye on this stock, MOD, and if it starts going up, then you can bet Ford and GM are going to be going up. And the reality is there's the gap trade. It's come all the way back. This is a fantastic trade in a sense that all by itself, in the sense that you can figure out a really tight risk reward scenario. Like if you were to get in here, where it is right now, and say right there, I want to put my stop loss. I mean, I don't know. I feel like that's way too tight, but you could do that because then the gap would hold support, right? I'm going to go about halfway into the gap and look at somewhere there. So just a little bit of room. And so you're talking about from 10 to 972, it's about 35, 40 cents. That's a tight amount of risk that you could put on, make that trade. And you only need to get 15 cents or so risk one to make two. But I wouldn't do that. I would not put the profit target in. Once it got to 15 cents, I'd consider taking profit. But actually, I'd be looking more like, trying to get up into this range for it to make a new high. And so that might take a little longer. But if it did, then you're making multiples, right? Now, if you don't like this trade setup because you think that's too tight, no problem. You can just bring that down and then just do that. That's the typical risk one to make two. But that's a good trade setup either way, whether you're risking two to make one or risking one to make two, whatever side of style trading you like, then this stock has you covered. And let's see here, the bid-ask spread. Yeah, see, the bid-ask spread is like 9 cents, which is a lot for a $10 stock. Once again, it means if you get into this thing and you're right, it's probably going to go fast. If you're wrong, it's probably going to come hard against you. So probably this setup is the better one. All right, well, that's it for today. The stocks to consider trading: Snap, and Ford, and Modine. Until next time, take care and trade well.